We're going to talk to Bob. Bob, great to have you on the broadcast.
Hey, Paul, thanks for having me. Sorry it took us 3 months to get together. Vacation and technical difficulty, but I'm here. Delighted to be here. Actually, it's a great time because it's going to be a big pivot. It's going to happen here. So, as you know, your audience doesn't need me to remind you that unemployment is creeping up. High-paying jobs are going away. Inflation is kind of bifurcating. Like the things that you want to have, you're seeing deflation already, which is bad news for the companies that produce those products. But the things you want to have and need to have are still sticky high, and you're not able to afford those things. But the stock market is looking at the forward path of the Federal Reserve, and they say looks like 98% chance they'll cut in September, an outside chance they'll cut in July. And so the market is front running that. And that's why the market's popping. And what people have to remember is when they make that first rate cut is actually the death knell for the stock market for that cycle.
Really?
Yeah, because it's basically an admission that the economy is rolling over. And remember, stock values are associated with their ability to generate free cash flow to either reinvest in a business, buy back shares, or give a dividend to their shareholders. If they can't do that, they're valued lower over time. And so, and by the way, there's 100% correlation there. Nobody needs to argue with me. That's just the facts. And they run it up ahead of time.
Yeah.
And then you get a roll. In fact, the average sell-off in the stock market on a rate cut, the average over the last 50 years is the stock market goes down 28%. And the long bond goes up 31%. So write that down. TLT will be a place where you're going to want to put your money in a downstroke of the stock market. We've been pushing,
and you'll know that once it turns, the downturn, or before the downturn, or just how will you know
the day he cuts rates.
The day he cuts rates,
you better be in TLT.
Be in the TLT. All right.
Yeah,
and explain the TLT to folks.
TLT is the 20-year bond yield. And what happens is that the bond has a yield associated with it, but it's a long bond. So when they start cutting the shorter duration rates, which that's all really the Fed can control, the interest rate on the long bond goes down. So it makes the ETF called TLT go up in value. You get the dividend the dividend that they pay, and then you also get the price appreciation. So every time it does that, last time it did that, TLT went up 40% during the COVID crash, went up 40% during the great financial crash. So that's that's one of the ways you protect yourself in the down market. And it'll start moving probably, I think the Fed meeting's the middle of September. It'll start moving, it's already starting to trickle now, but retail will start buying it probably 2 weeks before the Fed meeting. And that's when you should be taking your position.
So about the 1st of September, you should be trying to get yourself in position, getting over there.
Yeah, our customers are already well on their way positioning it, because there's certain strategies that we have that you could actually generate dividends on that ahead of time. And so too complicated to explain in here, but there's different ETFs you can do, and we pass those on to our clients so that they can be already building a position, grabbing the cash, and waiting for the big move. So that's one area that you have to be really concerned about. The good news is that if you're gold and silver bug going into a rate cut, it usually holds, and then they get worried about the banking. Bitcoin usually holds, and Bitcoin's is pushing up again too. Made an all-time high, and it's gonna manifest itself through that high over the next 90 days, and actually over 100,000. So there's trades that people set up for that as well that are very profitable. I sent you some attaboys. People are making some really good money on these trades because not only Bitcoin, but Bitcoin miners, Bitcoin proxies, Bitcoin ETFs. And so there's a lot of ways in which you can make money with Bitcoin in the stock market. And we show people how to do that as well.
Yeah. One guy says, you guys are the bomb. I've been in shares and calls on Wolf since the initial price target of near $2 for ETFs. I could possibly leave. It could possibly leave me, he said, with 10K a month. Trade Genius is legit. And just, you know, in other words, you're telling people this market is going to correct itself, because it, and I take it, and I'm not sure, of course, that inflation has something to do with driving the stock market up, because, you know, there's a lot of money, but at some point it has to correct itself. And let me ask you this question, Bob. The election coming up, I mean, obviously there's usually always an October surprise. Is that why you want also, besides this Fed's lowering the prime interest rate, do you also anticipate an October surprise in this year's election cycle?
Well, the market is thinking about that. So it's one of the reasons why we sold off today in the stock market is that people are positioning what they call their risk hedges are being put on right now. And those are all the way out to October and November. So it starts to affect the market now. Although I think we're still going to wiggle up and down for the next 6 to 10 weeks. But come September, October, the market will be in I wouldn't call it bear market zone, but it'll be highly protected. And so, and I want to address your inflation question. Inflation is good for the stock market in the very beginning when they're raising rates to combat it, you know, because there's more money coming into the bond yields. But once inflation takes hold, it's very, very bad for the stock market. Look at 73, 74 to 78. Stock market really struggled because, remember, input costs are rising faster than your customers' ability to pay for the pass through. So people just don't buy stuff. So you get a collapse in sales. So yeah, inflation is only a short-term gain. Don't let anybody fool you when they tell you, hey, they can raise prices. Sure, I can raise prices on my service all I want.
Doesn't mean it's good.
Whether you want to pay for it, okay?
Yeah, and, same thing happening out there in the retail markets. People only have so much money. If inflation prices go up faster than people's salaries, something's going to give. I mean, they got to pick and choose. You pay the rent, or do you eat what goes out? I mean, it affects, and I think we've about tapped out this inflation.
Yeah.
Don't you think?
Yeah. No, so for sure. And right. So people only have so much money. They have money and credit, right? And we know they tapped out their credit for the most part. Yep. You got to also remember everybody's not equal. So the people that are benefiting from a rising stock market are upper class and rich, right? Everybody else is having a standard of living adjustment down. And they're the primary drivers of sales for customers, for companies. So in the aggregate, those companies are going to start to suffer. You're already seeing it. PepsiCo's been flat. Nike is sucked.